So I thought what we do is focus on this op-ed that you wrote for The Economist on a Marshall Plan for Africa.
Okay.
Obviously super relevant, really interesting idea, and just going to drill down into some of the details of that, how it's going to work, China, US, all the rest of it, and sort of tease that out, and then maybe sort of do something, a couple of questions, broad questions about emerging markets right at the end, if that works.
Yeah, that's good for me.
Okay, cool.
I'm there's a little bit of a lag going on. So is that okay?
We don't hear that. You hear it. We don't hear it. Everything is cool. Yeah. Okay, so basically go like this. I'm gonna count down 5, 4, 3, 2, 1, and then I'm just gonna go straight in. I'm just gonna say, Dambisa Moyo, welcome to the program, and then you can say, nice to be here, Andy, or whatever, and then I go straight into the question, because I will have introduced you in the live show.
Okay.
Okay. 5, 4, 3, 2, 1. Dambisa Moyo, welcome to the program.
Thank you. Happy to be here.
So a decade ago, you famously criticized foreign aid for developing countries, saying that it fostered corruption and dependency. And now here you are, very publicly calling upon the United States and Europe to launch a Marshall Plan for Africa to rescue the continent from the ravages of COVID-19. What's prompted this change of heart?
So thank you. First of all, it is not a change of heart. And I was very clear in the article that my original critique still stands, which is any type of aid program that is delivered in perpetuity is extremely damaging politically and economically for the recipient countries. The point I was making in the article in The Economist magazine was simply that there is a very strong case in the current environment for a Marshall Plan type of program and intervention. Just to remind you, the Marshall Plan, which lasted from 1948 to 1952, which was about $135 billion in today's money, was short, sharp, and finite. And in much the same way, the proposal that I'm offering or suggesting is that we need a very aggressive intervention, which I believe will do three things, given the current global pandemic. One, it will absolutely ensure that we can stem the onslaught of the global pandemic, which we already see that there's some evidence of it occurring across Africa and the developing world, but it certainly hasn't reached fever pitch as yet. So in order to get in there and to try and resolve that, that's the first thing, healthcare. Second issue is the economy. We want to make sure that this aid package steps in really not as a stimulus, but really as a stabilizer to make sure that if people stay at home, as they are already doing, as we've already seen in Western countries, will be able to stabilize. And China is leading in terms of foreign direct investment, in terms of trade. And really, I think that there's a real case for Western countries to step up and to participate more aggressively in this battle for hearts and minds and ideology in terms of democracy and market capitalism going forward.
Okay. Sorry, Dambisa, your audio was phasing in and out during.
Okay.
Do you have any devices on around your screen? I don't know, maybe a technical director can help. I mean, if you can take it off, take all the Wi-Fi off that you can.
Okay. Yeah, the only question, are you on a Mac or a PC?
I'm on a. Oh, actually, you know what? You're so right. I just remembered. I've been PC all my life, and my partner moved me onto an Apple
You're on an
device.
Apple now. That's okay. That's all right. I'm gonna make one little setting adjustment to try
Okay.
to help with the signal here.
I've been
It
fighting with
was it
him
was coming
for
through really,
years.
really well, and then it dropped for a little bit. So we don't want to lose what you have to say here. So stand by one second.
I'm the old generation. We prefer PCs, but he is absolutely obsessed with Apple products, and so we end up fighting constantly about Apple versus Microsoft.
Let me make a little setting adjustment here. Stand by one second. Okay, we got you back. Can you still hear us?
I can hear you perfectly. Yes. Can you hear
Okay,
me?
great. Yep, we can hear you well. So I made a few setting adjustments. Hopefully, it'll be a little more stable. My apologies.
Turn all of these off just in case. Off, and
Okay.
let's try this again. So we're going from the top. Is that what's happening here?
I'm going to go the whole thing all over again. Sorry. Okay. So I'll just go all over again. I'll go 5431 and W. Samoya, welcome to the program. And then basically same question. I won't say change of heart. I'll say new thinking. Okay.
Oh no, I think it's good actually to say change of heart, because I've gotten a lot of like a hostile reaction that I think it's an opportunity for me to clarify. So I'm happy with that.
Okay.
Whatever you want.
Okay. All right, Kelly, are we good to go? Okay. 5, 4, 3, 2, 1. Dambisa Moyo, welcome to the program.
Thank you.
Sorry, let's start again. Sorry. That's my fault. Start again. Okay. 5, 4, 3, 2, 1. Dambisa Moyo, welcome to the program.
Thank you. I'm happy to be here.
A decade ago, you famously criticized foreign aid for developing countries, saying that it fueled corruption and fostered dependency. Now you're calling on the United States and Europe to launch a Marshall Plan for Africa to save the whole continent from the ravages of COVID-19. What's behind this change of heart?
Well, and it's actually not a change of heart. I've been very clear in the article that the view that I espoused 10 years ago is still very much valid as far as I'm concerned today, which is to say that any type of aid intervention that is open-ended and is given in perpetuity is extremely damaging politically and economically to the recipient countries. And you've just highlighted a couple of the reasons why: the issues of dependency, corruption, but also concerns around inflation and Dutch disease. The article is very clear that the types of aid interventions, such as those of the Marshall Plan, are and can be effective. And I was very clear in my book 10 years ago also. The point being that the Marshall Plan, which was from 1948 to 1952, was a short, sharp intervention and finite. And critically, it did not create the types of dependency that we've seen in aid programs more recently. Moreover, the aid program of the Marshall Plan was about $135 billion. I'm suggesting that Africa, given the complexities of the continent and the size of the continent, would require something much, much greater than the $62 billion that was originally pledged by the IMF and the World Bank to tackle the COVID impact. The more important thing is that I believe that there are three key reasons that mean that this argument for a Marshall Plan for Africa is extremely valid. One is really we're in the middle of a global pandemic, and the ability to assist African countries to combat the health pandemic, I think it would be enhanced by this type of an aid program. The second reason is really an economic one. We've seen a lot of stabilization and stimulus packages across Europe and the United States. An aid program such as the one I proposed in The Economist magazine would really help not only to provide a stabilization of very challenge African economies, but also really be a catalytic in terms of being an opportunity for stimulus. And then finally, really, and this again is in the article, I think there's a moral imperative, certainly for Western countries as they continue to pursue ideological beliefs in liberal democracy and market capitalism. The argument here being that Western countries are lagging behind China, is specifically, as we've seen China in the last few decades, certainly in the last decade, really amp up its efforts in terms of foreign direct investment and trade across not just Africa, but the emerging world in its totality.
We'll get back to China in a minute, but let's talk about Africa. Has Africa changed? Are the conditions that prompted your criticism a decade ago no longer relevant?
No, they are relevant in large degree. It certainly is the case that the economies in Africa remain extremely vulnerable. So, for instance, we know that according to the World Health Organization, really governments should be providing about $35 to $40 per person per year in order to ensure economic healthcare is provided to their population. And many countries in Africa are just not able to do that. We also have the issue of slow and low growth. Many African countries continue to fall way below the sort of 7% number that really we need to see in order for them to double per capita incomes in a generation. According to the rule of 72, that number is really more like a 3%, but given the low levels of economic development on a baseline, I believe that the numbers would have to be much higher in order to see real meaningful progress in a generation. And then obviously politically, we are seeing that, on the whole, things are much more stable than we certainly saw in the 90s, where the Stockholm Institute talked about Africa having more civil wars and more civil unrest than the rest of the world put together. I mean, it has stabilized in some respect, but I think there's still many vulnerable hotspots and concerns around spats from the global disorderly migration, but also concerns around terrorist activity, environmental degradation. I think this confluence of factors are real areas that Africa continues to be challenged with.
Well, the West most certainly has changed. Certainly in the past few years, it's more inward-looking. There's more talk about self-reliance. Trump's America shows no inclination whatsoever to lead the world. Quite the opposite. It's COVID-19 has brought on this sort of dog-eat-dog international mentality between countries. What makes you think that the US and Europe right now can rise above all this and pour funds into Africa?
Well, look, I always pride myself as being a realist, and I was very clear in the article that some may view this as fanciful and actually really ill-timed as a proposal because of the issues that you just raised. We're in a world of quite a lot of evidence of deglobalization, but beyond that, we also know that many of the developed countries that we're looking to across Europe, including the United States, have enormous debt and enormous deficits, and certainly in debt terms, we haven't seen the debt to GDP ratios, that we're seeing today over the past 100 years, and so really in a vulnerable place themselves. But again, I think that this is not really a call for sympathy or for some kind of a sort of a asking for generosity just on the top of it. It's really a claim to the moral imperatives of the Western society. If Western society wishes to continue to be a leader, wishes to continue to innovate, and certainly in the case of immigration, wants to avoid disorderly migration, which we've seen over the last few years, and certainly in Europe, I believe that they need to be invested in a much more active way across the African continent and in the emerging markets more generally.
So geopolitics informs some of the thinking behind your call for a Marshall Plan, right? I mean, you see this, as you say, as a way for the West to regain influence on the continent lost to China. Some might say that this shows something of a Cold War mentality. Why not ask China to join in? Why not make this a big global US, European, Chinese effort to rescue Africa?
Well, first of all, China's already there, so I don't think they need to be co-opted or convinced. They are the largest foreign direct investor, the largest trade partner, and now the largest lender in terms of debt across many countries, both developed and developing, but certainly across Africa for many, many countries. And so it doesn't seem to me to be a pitch that needs to be made for the Chinese political class. Whereas I think this is a story and a narrative that and that I basically was worrying about 10 years ago when I wrote Dead Aid, because my concern was that there was always going to come a day where we would have a lack of enthusiasm around delivering aid to Africa. And my concern was that African countries would be ill prepared for it. And I think we are all ill prepared for the global pandemic. But, clearly African countries which hold a lot of international debt and are struggling, not just in terms of the cost basis of the amount of debt returns that they have to pay on terms of interest, but also as a top line revenue number. The fact that commodity prices have softened and the prospects for global growth have weakened on the back of this virus really means that the narrative around Africa is becoming even more challenged.
So, as you say, China is already a major player in Africa. Much of the investment is channeled through Xi Jinping's Belt and Road Initiative. Lending within that program has already reached several $100 billion. What do you think? What impact do you think this crisis is going to have on Belt and Road? Does it put it on hold, or could it be powerful enough to derail it altogether?
Well, too soon to say is what I would say. I was somebody who was very much of the belief of a V-shaped recovery early on. I've had the privilege of serving in a number of corporate boardrooms, and I spent a lot of time with public policymakers, and I realized quite quickly that was a little bit foolhardy, because clearly there was some deeper entrenched structural problems that have come to bear. In the case of China, the broader emerging markets have actually not had a very good story since 2007, which is, I believe, when we saw the last highs in the market. So since then, we've had a really challenged environment versus emerging markets. So what do I think China is going to do? I think that there is and remains a longer term imperative for them. And so in many ways, they could pick up a lot of assets on the cheap already because of their very powerful position as a lender to many governments in South America, across Africa, and broader emerging markets. I think that they have the upper hand and a lot of leverage in this environment to be able to renegotiate terms. And we've seen some of this in terms of distressed assets. And we know that in some cases, it's not just about extending changing coupons and extending maturity dates. It's really about getting a quid pro quo in the form of natural resources, which I think China will continue to be quite aggressive on. I can't imagine that they wouldn't take advantage of this opportunity. So if you look on a reserve basis and you look on the fundamentals of how the political class in China thinks about these things, it seems to me that they will continue to be quite aggressive.
Last question on emerging markets generally. One of our New Economy Forum delegates, James Crabtree, wrote recently in Foreign Policy, I believe, that the pandemic brings an end to the very idea of emerging markets, that fast-growing, poorer countries become the darlings of financial investors. Is that assessment too harsh, do you think?
Well, listen, I have spent a lifetime being very pro-emerging markets. I felt that the underlying factors, capital, labor, and productivity, were very compelling as an investment thesis. These countries had relatively low debt. They had both quality and quantity of young population that could drive economic growth. And of course, in terms of productivity, they were importers of technology. They were importers of a lot of ideas, rule of law, etc., that had proven over time to be beneficial to growth. But that actually has not materialized. And I think that's somewhat disheartening for someone like myself to accept. As I mentioned a moment ago, it's been several decades that many people from the BRICS to many others have been extremely optimistic of what would happen in the emerging markets, and they've continued to lag behind. So, fundamentally, are there a group of countries that have a narrative where we've remained optimistic, but it's continued to disappoint? I'm afraid the answer is yes. And in a world that's becoming more deglobalized, more competitive, more zero-sum, I fear that there's going to be a sort of, dare I say it, come to Jesus moment around what the path forward is going to be. I mean, I worry deeply that we see a reversion towards more import substitution, much more of the sort of tried and tested models of economics that actually did not deliver sustained economic growth. But we are in a point of desperation in many ways. And I think the confluence of many factors, from income inequality and climate change and debt and deficits, and also concerns around demographic shifts, I think makes it a very, very lethal cocktail.
Dambisa Moyo, thank you for taking the time to be with us.
Andy, thank you for having me.
Wonderful. Thanks so much, Dambisa. Really appreciate it. That was great. That was terrific. Really, really good. Yeah.
I hope so. And I'm sorry about my background as well. I'm actually, when I saw it panned into my bedroom, I thought, oh God, it would have been nice to have some beautiful books and photographs, but hopefully you can do something with that.
Yeah, it looks absolutely great. By the way, I still remember your powerful presentation in Beijing. Really terrific.
It gave me such an opportunity. I enjoyed it.
And I wanted to tell you, we have this virtual forum now. We're going to do it virtually, and we're going to have heads of state. We're going to have CEOs, and we're going to have these sort of councils where we're going to kind of rebuild the global economy, trade, finance, investment. Would love to get you involved in that effort.
Absolutely, happy to, and hopefully I won't have to have an emergency, and I'll be able to be there live. So I'm sorry to bag it today.
I really hope all that works out. I'm so sorry.
Yeah, no, it's one of those. I don't think it's going to end well, but thank you. I appreciate that. Yeah,
all
please
right.
stay in your mind, and I hope to participate again soon with you.
Thanks. Appreciate it. Bye. See you.
Bye. Bye.
Yeah.